So you're putting in all those extra hours, working hard to save up for a home, and you expect that money to count, right? But when it comes time to get a home loan, how much of your overtime pay do lenders actually look at? Well, let's dive right into this, because we're going to figure out how you can get full credit for every single hour you work. And just so you know, for this explainer, we're pulling all our insights and data from the awesome work done by the experts over at Finance and Hub Networks. Okay, first things first. Let's talk about the big hurdle, the common roadblock that so many people run into when they try to get their overtime pay recognized. This is the core frustration, isn't it? You've earned every penny of that money. It's right there on your payslip. But when you go to apply for a loan, it feels like a huge chunk of it just disappears into thin air in the bank's calculations. It feels totally unfair. I get it. But there is a reason for it, and understanding that reason is step one. And that reason has a name. It's called shading. It's a pretty standard practice in the world of lending. And you know what? It all comes down to how banks look at risk. See, to a lender, not all income is created equal. Your base salary, that's stable, it's predictable, they love it. But things like overtime or bonuses or commissions, they fall into this bucket called variable income. And because it can go up and down, lenders see it as just a little less reliable and a little more risky. So to protect themselves from that risk they see, lenders use this practice of shading. You can think of it like a haircut for your variable pay. They just don't count all of it when they're figuring out how much you can borrow. And what's the magic number? Or maybe not so magic number? For most banks, in most situations, they will only count 80% of your overtime income. So right off the bat, you're losing 20% of your earning power in their eyes. And you can see the difference it makes right here. Lenders look at your base salary and value it at a full 100%. But that overtime you worked so hard for? Nope, they automatically apply a 20% discount. And let me tell you, that gap can have a huge impact on how much you can actually borrow. But, and this is a big but, here is where it gets really, really interesting. That 80% rule, it is not set in stone for everyone. For a very specific group of professionals, there's an exception that is an absolute game changer. I mean, just imagine for a second, if you could bypass that shading completely. What if you could find a lender who would value every single dollar of your overtime? For some of you watching this, that's not just a hypothetical, it's a reality. That's right, 100%. Certain lenders will assess 100% of your overtime income, giving you full credit for all the work you do. This can seriously increase your borrowing capacity and open up a whole new world of possibilities. So, the crucial question is, who qualifies? So who gets this special treatment? We're talking about our essential service workers. Lenders like BankWest and NAB, they get it. They recognize that for these jobs, overtime isn't just a random bonus, it's a consistent, reliable part of the role. We're talking about police officers, firefighters, paramedics, doctors and nurses who are employed by a hospital, border force, corrections officers, and even educators. If you're in one of these fields, that 80% rule might not apply to you at all. Okay, so knowing you might be eligible is the first step. The next, and just as important step, is proving it. What do lenders actually need to see to give you that 100% credit? Let's get into it. It is all about demonstrating consistency. You're going to need to gather your recent payslips. Most lenders think NAB or Westpac, they want to see a year-to-date history of at least 3 months. But others, like FirstMac, they might want to see a full 12-month history to prove that overtime is truly a regular thing. You'll also probably need your latest tax documents to back it all up and show a full financial year's earnings. This quote right here gets to the absolute heart of what lenders are looking for. They need to feel confident that your overtime isn't just a temporary boost, but a reliable and continuous feature of your job. All that documentation, that's your evidence. Okay, so as you've probably figured out, not all banks are the same. Let's break down the policies of some of the major lenders so you know exactly where to look. And here is how the big players stack up. You've got the standard policies from lenders like ANZ and Westpac, who pretty much stick to that 80% rule across the board. But then you see BankWest and NAB with those key exceptions for essential workers. And FirstMac, they're the real outlier, offering up to 100% for anyone who can show that their overtime is regular and ongoing. So let's just spotlight the winners here for a second. BankWest is great because their definition of essential industries is really broad, which is fantastic. NAB is a go-to for medical and emergency personnel. And FirstMac, well, FirstMac is a powerful option for anyone in any industry who consistently works those extra hours and has the 12-month history to prove it. Now, this is a really crucial point. The devil is always in the details. For example, NAB's 100% policy for nurses, it applies specifically to those employed by a hospital. If you're a nurse working somewhere else, their policy snaps right back to the standard 80%. This is exactly why it is so important to check the fine print of every lender's policy. So, the key takeaway here is this. The extra hours you work absolutely can and absolutely should count towards your property goals. The difference between having 80% or 100% of your overtime assessed can be tens, even hundreds of thousands of dollars in borrowing power. It all comes down to finding the lender whose policy matches your profession. The real question is, are you talking to the right one?